I believe we are live, ladies and gentlemen. Thank you for joining us this Sunday evening. I hope you are doing well. It's been a very wild month. Actually, the whole year so far has been quite a wild ride. I want to thank you all. I think I survived the first quarter of 2020. I'm proud to have made it this far with you guys. Thank you very much. It's exciting, it's crazy, it's wild, and what we want to look at this evening is the potential of Bitcoin's price going quite a bit lower, I guess. Actually, we'd put one of these, part of our free newsletter out this afternoon to all of the people that are signed up for the free newsletter, and then for the private bears, we actually put out an earlier morning call as well as in the private group. So we're going to go over those today. I'm also going to take a look at Ross Albright's recent write-up because his ideas seem to align not too dissimilarly to mine in where I believe the price of this market is going to be going. So we're going to take a quick look at some of these short-term trends as well as the long-term trends. So with that, we'll just throw you the logo and then we'll dive in. Okay, so this is Bitcoin on the 1 minute chart right now. And so it's really exciting. We get to see the minutia. It's like the little tendons and tendrils of Bitcoin as it moves. Now, for those of you that got the free newsletter this morning, our first point was went out around this time and it was looking for a 7,200 point resistance. And that was for the private Bear Den. And then the free Bear Den letter actually came out today as well. I'm trying to write them more frequently now that we have more time. And what we were looking at on this was actually the long-term downside. So I'm actually going to take the Ichimoku cloud off, although on the 4-hour we are closing below that, so we're still bearish for the trend in Bitcoin overall. I want to take a look at the daily chart here too, and I want to show you, actually we'll go all the way to the monthly. This will be the easiest way to do it. I have to excuse some of the other writing I have on here for now and just leave it as it is. So we had mentioned this multiple times throughout this last year that the downside, well, aside from just being zero, is actually, I think, somewhere between around $1,500. We had said that a long time ago when Tyler Jenks was still with us, and we went over that with him in the live streams back in 2018, the late of 2018. And this is what we were looking at. I thought the B wave would go maybe to around 6,000, and we saw this extremely excited bull run all the way to the 786 on the Fibonacci life of Bitcoin so far. Now, I had suspected that we wouldn't go that high, but that I still think that this was a B wave and then a C wave, especially because we didn't have volume that brought us up as high as the 786. We've pretty much, as far as I'm concerned at this moment, we've left the world of a bull market behind. The pandemic is going to have unimaginable consequences, and a lot of the things that have already happened in the markets, the supply chain, we won't feel for another few months. I also, and for all of you that are in both the free or the private den, you know that my thoughts are in the 6 to 18 month range is how long we're likely to be in quarantine. So this isn't going to go away overnight, and it's very unlikely that it's going to go away anytime soon. So as we go back down the time frames here, we'll take a look at the daily. This was where the resistance line we were looking at. I know it looks like a little crane. I was drawing an origami crane here, apparently. We're right up on the 21 simple moving average on the daily here too, and I like to pay attention to this area. I think it's a very strong area. I think, since I felt like Donald Trump saying it's like the best area of support. No, that's not entirely true. It's just one of the numbers I happen to like. It's become one of the ones I rely on in this space as well. And also on the right-hand side of the volume profile, you can see right around 66.50, we have a lot of support, which is actually, we have a lot of support. We're currently just above that at 66.83, 66.90 here on, I believe this is Coinbase, So we're currently just above the middle line on the daily. Oh, look at that, smack dab on points, or $6,666.50 there. So I think this area is an extremely important area of support for us to close over at this time, at least for now. If we go back up to the monthly, this is where we start to see the lower volume support side. I'm going to take you into the conjecture that Ross goes over as well, because I do want to warn everyone that Bitcoin could go super low and maybe even fail here. I don't think that's going to happen. We don't know the long-term consequences of what has already happened. So let's just for a minute assume that it could go as low as $0. That's the worst case scenario. That's in fact always been the worst case scenario with Bitcoin. Yet the asymmetry that we're looking for in a long-term play like this is it goes into the hundreds of thousands of dollars, somewhere into the 4.618 all the way up here, 4.236, sorry, around 75 grand. That's a very high possibility as well in the not too distant future. So as we go down the time frame, we go down to the daily. We saw what we were looking at today, which is, again, this nice origami crane with the $7,200 resistance. We blew that candle. We peaked, just touched it, and slammed right back down. So again, as we get closer, you can see how these moves played out. And what I like to do here is always just move in and out like a telescope or a microscope through all the time frames. And then as I get to different time frames, depending on what it is I'm looking for, I'll use different indicators to help me decide what's going on. And these are just, you want to be able to remove your emotion. So if I told you Bitcoin's going to $190 and you don't like that, you're not a good trader or an investor. You shouldn't invest with your emotions. You should be investing with your logic. So logically speaking, I think all of us here believe long-term in Bitcoin and are excited about that. So what I want to do is, again, look at the sequence of downside here that I believe is the potential. Now, we could maybe have some really good news, right? All of a sudden, there's the new therapeutics are working. We can start to unlock, but even still, the rest of the world is going to be struggling with this pandemic. You know, I've seen a lot of people, not probably any of you guys, I'm sure you know better than this, but I've seen a lot of you post videos of like someone going to a hospital and it's not overwhelmed yet. Well, that's a good thing. That's why we started social distancing in the first place, is so that we didn't and wouldn't get to that place. So hats off to all the medical workers for doing the job, and hats off to everyone for doing what was kind of the right thing to do. Because again, with a novel virus, even if it's not that bad, we want to take some pretty poignant decision-making processes like at a very, very quick pace. Otherwise, it could cost us a significant amount more. And that was kind of the downside, is we didn't lock down and block travel off in the late of January, and therefore we're stuck with the kind of knock-on consequences of not dealing with this properly. So what does that do to the market? I believe we are about to enter a depression. I can't see how we get out of this, even if we do come up with some type of therapeutic, or at the least favorite of the conspiracy theorists, a vaccine. Because even the work that we have done with vaccines for SARS viruses in the past create hypersensitivity, although in 2003 our medical technology was significantly worse. So barring the fact that a miracle happens, which I don't think is coming, even those therapeutics or a vaccine showing up within the next 6 to 18 months is not going to change what happened already. Having China shut down between January, February, and March, we still won't know what that means. Having India on a lockdown right now for the next 2 or 3 months, we still won't recognize what that means until it actually starts to hit our corner store. A lot of the things we used to buy, where they would come from, where they would be produced, that's not going to hit Main Street for a little bit longer. So the consequences haven't caught up with what we have to go through here. So on the daily, we jumped up. We hit the $7,200 mark, almost right on the number, 71.90 on Coinbase here. So that was quite exciting to see. It happened way faster than I thought. I thought we were going to have another day of consolidation before we fell down lower. But nonetheless, as soon as we started to turn over, we fell. And this is where I want to zoom in here. And this is where the trader in me starts to come out, aside from the investor and the the long-term speculator and what's what may or may not be happening in the future and with the pandemic. So I'm going to turn on one of these. There's a few I really like to use. First off, it's the Ichimoku cloud as well as the Bear Claw. You can download. You get all these for free. Now I'm only going to use one at a time here, but I want to show you what we were watching. So take the Bear Claw off. Now we've got the Ichimoku cloud on. Now when we were above this area here, and we had the 21 simple moving average at the 15-minute. Right above the volume line of the Ichimoku cloud. This was the big indicator that once we broke below it, we were going to go lower. Now we sent a private message out to the bear den, but again, I thought we had another day of consolidation because we haven't seen. Wait, did the futures market open and I missed it? The futures markets may have opened and I missed it. Let's see, futures market, U.S. stock futures. Does it show me? Oh yeah, there we go. S&P 500 down 40 points and 1.4%, 27.39. I think that's what it's stuck at, so they haven't opened yet. Yeah, 27.39. Yeah, they're still closed, I think is what it looks like over here. Data's at 9:33 p.m. Anyways, maybe I've got that wrong. I'm sure some of you guys will be able to help tell me that in your thoughts in the comments on the side there. So hit that up. I'm going to finish talking about where I was going. So we saw this big sharp drop back here in Bitcoin. And again, the Ichimoku cloud is one of my favorites, especially for these more short-term kind of, whether you want to call it scalping, kind of swing trading. Again, there's just so much volatility in the market here. I actually assumed we would stay above the Ichimoku cloud till around Monday afternoon and then come dropping down. So in the private bear den, we were watching it bounce along the top of the cloud here. And then as soon as it sliced through, I went short because we just cut through that so quickly. And it was a 7% drop at its total here, 5.87%. I think I closed that short at 66.50. It was just very, very, I think it was maybe a 25-minute trade in total, like an hour-long trade in total. Yeah, an hour. Didn't even make it through cooking dinner, essentially. So now let's go even closer. Let's take a much closer look and try to decide what's going to be happening on the short term. And maybe what I'll do is I'll even open up the chat so you guys can ask me some questions. But what I want to do is I want to watch this 1 minute chart here with you guys. So here we have the white line is the 21 moving average on the 1 minute. We have the red volume line right here, which is following as part of the Ichimoku cloud. And then we've got the sell cloud and then the buy cloud. So we went and punctured straight through the sell and the buy cloud now. So what we really want to see is the ability to get back above this 21 simple moving average and into the cloud. Now, what's nice about this is because it's going to happen so quickly here, we're going to kind of get to watch it together. And that was the point of this show this evening. I do believe we are going lower. We'll go over Ross Albright's paperwork here as well. He's done a great job, and his guess is somewhere between $175 and $1,200. $2,800 and $1,200. And I generally agree with this. I think this is the right sentiment to take. So while we're going, let's learn a little bit about trading and investing. I had a great phone call with one of the private Bear Den members. If you guys want, and you haven't yet, you can sign up for our free newsletter by going to arcanebear.com. If you've never been there before, it'll ping you and you can sign up for the newsletter. We do send out information through there. And if you want to sign up for the paid newsletter, you can do that as well. The links are down below. But so one of the reason why I brought that up is because one of the Bear family members, you get a consultation call with me when you sign up. So we jumped on the phone and we had a chat. And one of the really valuable things I think that came out of that call is, he was telling me, he's like, I hodled and I went through this big time where I didn't balance my portfolio essentially. And I kind of realized that one of the things about trading that's really helpful for the long-term investor, say like the hodler, is the ability to press both the buy and the sell button. It's a hell of a lot easier when you say it, but when you actually do it, to execute a buy or a sell, it's not always so easy. You got to bet, right? So the long-term holder says, I'm just going to buy and hold. And that's a great sentiment. But when Bitcoin runs to $20,000 and comes tumbling back down, or up to $13,000 and then maybe comes back down to $1,200, are you balanced enough in your portfolio to be able to hold for the next 2 to 5 years. And if you're not, it allows you to execute intelligent decisions so that you can rebalance your portfolio and make it through the winter months. And so many people have always asked me like, oh, well, why are you a bear, not a bull? So bears are actually the really smart animals here. They're the ones that know how to save and forage through the winter and make it through the difficult times. And currently we have found ourselves in some difficult times. This again is why my overall sentiment in Bitcoin is still bearish. So now, again, what I want to do here is clarify that if you just hold, and you hold for 10, 20, 30 years, there are times you are always going to want to rebalance your portfolio into either property or business equity. Cash is going to be super important over the next few months, because then you can build and you can make it through these difficult times. Trading is another way to do that. But a lot of people have a difficult time trading because they're very emotional. And if you are invested in Bitcoin, and when I say, oh, we're going to short Bitcoin, you think, oh, how could you do that? You're the reason Bitcoin's price is going so low because people are trading. It has to be able to withstand being a speculative asset and go through traders' hands to be usable as a money too, right? That's kind of like the sell and barter. Trading is like the barter and sell playground of the sharp-minded, we'll use that word. And learning, again, that buy and sell execution is something that takes a kind of like cold, calculated, okay, this is what needs to be done, this is what we're doing. You shouldn't necessarily be able to tell the difference of how good or bad your day was if you made or lost a Bitcoin or 2 Bitcoin, right? It should be a simple directive of, okay, this is what needs to be done right now. This is what needs to be done for making sure we can make it through these difficult times, execute, and move forward. This is, the universe is a fairly hostile place. Like if you zoom out from Mother Earth, you see galaxies colliding into one another, stars being sucked into black holes. And you have to take... If you get emotional about those things, it's going to make all of your moves that much more difficult. So even if you are just a long-term investor, getting in and trading, losing a little bit of money, and learning how to press buy and sell when you need to is such a rich skill to have, because it allows that investor in you, and I think they should be looked at as very different accounts. It allows that investor in you to make decisions that are calculated based off what needs to be done. And that's not always the easiest thing to do, right? We're super excited about Bitcoin and it's the future of money and no more tyranny and we can see all the transactions, right? Bitcoin's awesome. And there's a lot of other choices now too, from Litecoin, Ravencoin, Digibyte. Look at the thousands of other options that there are for this type of technology. And again, if this gets under your nerve, you're like, oh, it's not Bitcoin, blah, blah, blah. Well, then you're too married to this thesis, in my opinion, to be a good trader or a good investor. If your thesis is sound, you don't need to get emotional about it, right? So in the long term, if the thesis is sound for Bitcoin and it goes to hundreds of thousands of dollars, does it matter if the next 18 months of price action brings us down to the $1,800 mark? So I'm going to read through Ross Albright's bit here. And hopefully we can watch Bitcoin break down, because it does look like it's going to, doesn't it? It can't get above the cloud. It can't get above the 21 moving average on the 1 minute right now. Does not look good. So I'll quickly read over this. Shout out to Ross. Hopefully they let you out, because it's silly that you're in prison, I think. So on December 10th, 2019, I wrote the following. It says, a drop below the beginning of wave 2 was around $4,200 would invalidate the impulse wave of count 5 because wave 4 cannot overlap wave 2. This would indicate a much greater likelihood that our second scenario is playing out. And this is Ross has our similar second scenario, which is an A, B, and then a C corrective wave. See, you can see that he's drawn it out here. And then the C corrective wave. And we've had this written in our private newsletter since April of last year. So hats off to all the newsletter Bear family members. We've made a 1-year anniversary. Happy birthday, Bear family. So about exactly a year ago, we still said, hey, we could go down to $1,500 as a big C wave, right? And I believe that Ross is correct in his assertion here. So since the price Bitcoin has dropped, we'll read down here again. So estimating the extent of the duration of wave 2 is difficult and imprecise. There's no limit of how low it can go, except for 0, because wave 1 started at 0, and there is no hard limit on how long it could take. However, corrections will often end in the price range of the previous 4th wave of one less degree. That was wave 4 from back in 2014. Its big price range was between $175 and $1,240. And we looked at this together at the start of the show on the monthly time frame here. If we scroll out like this, excuse it, it's a little messy, I know. Down here we have $220 approximately. This is where the volume profile support is. So there's effectively no support up until around $400 to $200 on Bitcoin. It could go that low in a speculative market moving forward. A pandemic is unimaginable. Again, we're not even going to see the effects of what has already happened for months. This is not good, okay? Keep that in mind as I say these things. So I'm just trying to help everyone, make their own assessments about their own balanced portfolio and how to make it through the next 18 months potentially, okay? That's my goal here. If we see something change, I will let the private bear den know first, and then everyone else in the free newsletter, and generally hopefully on YouTube here as well. I'm more active not on YouTube because when I do I needed to do this video because it felt like it was the right time. So hopefully this information is valuable for everyone out there listening. Smash that thumbs up button, that like, stay healthy. Likes for health. The more you like, the better your health will be. This is not medical advice. Okay, so what was the point of all of this sentiment? Oh yeah, right here, back this one. I want to keep reading. So from Ross Albright's word, I'll go back to quoting him. It says the two previous bear markets of primary degree reduced prices by 86% and 94%. An equivalent reduction by wave 2 would take it to prices of between $2,800 and $1,200. Wave A of 2 prices reduced around 84% to an equivalent of wave C, which would be $2,200. And I agree with this. Our middle assertion is around $1,500, so that's not too far. Anywhere between $150 and $2,800 is a fairly fair estimate. That's what I believe. I'm leaning into that at the moment because this looks like a very strong C wave taking place. So in terms of duration, again, from Ross's words, if wave C lasts as long as wave A, it will end around June or July. However, wave C of 2 and wave C of 4 are not labeled. Again, I would speculate that it actually probably takes a little bit longer. We will probably see a price jump back up to something here on the daily crane that we are looking at, up towards the previous resistance level of around $7,000. There's a fair amount of support here, again, around $6,600 on the volume profile, at least on the 45-minute where we're looking at this whole downward move. If we go out to the 4-hour, it does change. It does change, and the resistance comes back up to 7,300. Again, this is why I believe that it will bounce up to the $7,200 area again to test this downwards line. And now that I look at it, I think you can see another potential for look at that, almost directly downwards. So there's a lot of this downward trend here at $7,200 is very powerful. Look at this, all the way from 10 grand, this hard line. So it's snubbed right up in against it. So I do believe we will recheck that line again. So again, bouncing off Ross's words here, I think it will take a little longer. So his idea is that it's not labeled. Yeah, down here. Figure 2 shows a close view of the wave to date. Again, this one here, which is nice, not too dissimilar to what we were looking at before. Great job, Russ. I think you've done a fantastic job charting this. Nice work. Figure 2 shows a closer wave to date. Wave A brought prices down to $3,200 and B brought them back up to $14,000 nearly. Wave C should bring them to lows below $3,200. Okay, that's below the recent low that we had. Okay, remember, the C wave will bring us lower than the B wave, which is what we believe we are in. So the sentiment that we originally had held with Tyler Jenks looks like it probably will play out. God bless his soul. So I have tentatively labeled the move from the end of the wave B to the low of near 7,000 as a counter trend, and the rise above 10,000 is wave B. The low near 6,400 is not the end of the wave A, but rather the wave B of B in a pattern called the running flat. I do not know that one. Nice. I'll have to take a look. So now we are in the final of wave C, C of 2, and a break below the major low of 3,200 will be a solid confirmation of this, at which point we will be trying to determine whether the final low is in or not. This will be a temporary major buying opportunity. If the price rises above the peak near $14,000, we will have to reevaluate this current interpretation, but at this point, this seems like a very unlikely scenario. As noted before, the end of Wave 2 will be accompanied by extreme pessimism and possibly antagonism towards Bitcoin, on par with extreme optimism accompanied at the end of Wave 1. It will take a fortitude to buy in at such an environment, but the rewards of Wave 3 takes the prices to new high and be well worth it. And I can agree on that. So what Ross and I agree very, very strongly about that. Great write-up. I will leave the link on Twitter for those of you that don't follow me on Twitter. Go follow me on Twitter. I'll post that link here as soon as the show is done. So if we go back and really try to remember, okay, very high likelihood, ladies and gentlemen, with a pandemic, we are going to at least $3,200 from here, maybe even between $100 and $2,000, right? It's a broad estimate, but at the same point, if we remember and we go back out even further, you're going to remember that for a long time, we've speculated that this might actually be a wave 1, and you could see a wave 3 come off of this. So if you imagine that this was a wave 1 and you see a wave 2 retracement to, let's say, $1,500, which is not totally out of the ordinary, and then you see a wave 3 to 29,000, and then a wave 4 up to 100,000, wave 5, right? Probably a little bit further out. I do suspect that we're going to have the buying opportunity probably all the way through 18 months from now, mid of 2022, beginning of 2023. That would be my guess. Something like this, maybe even a very sharp run into 50,000 with this current wave 5 projections. So this is essentially what the long-term projections might look like. But in the short term, you have to ask yourself, are you ready to bear the brunt of Bitcoin dropping down lower? Now, if for some reason we hold at the 236 line here at 4,400 and we manage to make it through the pandemic without the price ever breaking lower than that, because the price of Bitcoin's liquidity is, it's a very illiquid asset. We've seen that through its volatility. So if it remains an illiquid asset, all these, Bitcoin accounts that have never been moved since its early days, then we can assume a potential variable here that I don't think most people would look at. And this is the only time I'll step out, and I'll do it just to be the devil's advocate and not disagree with Ross here, but say that there is a potential, yet again, unlikely scenario here, is that we come down and test this $4,000 area and we actually build a fair amount of support here. Only because I would wager a guess that with how much money we've already printed, $4,000 today is almost like $1,500 back in 2014. Now, again, that is a wildly far out thought process to take oneself down and say, okay, so since 2014, have they printed enough money to inflate the currency to the point where $4,000 is now effectively what $1,500 would have bought you then? And maybe we could probably argue that might be the case. So I'm not going to bet against it. So in the meantime, what I always do is I constantly recheck my hypothesis and my current trading and investment thesis by rolling and scrolling through the time frames. Right, so we bounced off the $6,600 support. I believe we're going to come up here, check up the 7047. Let's draw this in for fun. Give you guys my full outlook while we're here. It's going to be a ABC, first small one. So let's A, B, C, like that. Probably a little lower, actually, 6,400 to 6,100. Let's go 63, like this. Something like there. Anyways, point of this being, as we continue down this path, these are going to be like check marks of affirmation on our current trade and investment thesis. Okay, we went short Bitcoin around 86 and 7,600, stayed in the short until around closed out. We got really lucky at 4,600. It was like a very late night decision, but we managed to pull it off, and there was no profit on purpose on that one. That was almost I expected we would go low, but not that low. And again, this is also the reason why I believe we're going a lot lower still. So again, remember guys, what I'm trying to do here is give you enough context to the reason why I believe there's so much power in this downtrend coming in, and to prepare your portfolio. I'm going to open up the question part of this a little bit, and we're going to go back here and watch it on the 1 minute so we can kind of engage and learn about what's going on. And then you guys can ask me any of the questions you want. Give us the thumbs up and start writing those questions down now. Okay, good. Are you writing them? Because I'm about to flip the screen over here and come find these chats. So how do I pop out the chat? Pop out chat. Okay, good. Here we go. Okay, we'll run this over here. I hope you guys are having fun. I'm going to just read through your thoughts and comments. I probably should have opened up on a different screen, but this will do the trick. Any idea how you tell if you qualify the stimulus money in USA? No, I do not. I do not know that. I do not live in the United States. I live in Costa Rica, and I do not qualify for the stimulus money that they are giving out here either. So I am fixing to get a dip to buy. It seems that way, Wendell, somewhere between $3,000 and $250. And again, unless we break that sentiment of that really hard downward trend we're in right now, and don't see how it would happen, a pandemic. So I'm thinking C wave to the bottom. Yeah. Nice. Alex said, as I sold out my position at 5K after hit 38, may be able to buy back sooner, restoring my position. I do believe we're going lower, Alex. In the trading positions, I would try to, when there's so much volatility, you really don't want to sell during the volatility. You want to wait until things get a little calmer. Otherwise, you're just making brash decisions. So again, unless you're doing something without emotion involved, it's going to hurt. And if you feel super emotional, just wait it out. Usually it works out for a little bit better, right? So we had it to that top of 77K over 5K, right? So you could have, if you were patient, it would have clicked in there. So there's a lot of the times you just want to remove your emotion and breathe through it. Moonshine Fuel says, forgivable stimulus money is a payment for employees' paychecks. Partial forgiveness depending on how much you can prove. Yeah, I don't know much about the United States stimulus package. I'm sorry, guys. We'll not be able to help you out there in any way, shape, or form. There's really no way to tell. Okay, more love to stay. VidCall is horrible. Why is it horrible? Oh, you can't read anything on the screen. Well, you're not supposed to be able to read anything on the screen. It's just numbers. The numbers are really small too. I said them, right? I figure you guys figure out how to do this on your own if I just say it. It's like, probably don't need to see the screen. It's not super important. And if you do, you probably should have trading view of your own. Anyways, I don't know how that one has. So I'm gonna go ahead and assume that probably has something to do with your screen and your internet, not ours. What's your thoughts on the Bitcoin halving? Will it shake out miners, especially if Bitcoin falls to 2K? Yeah, look, this is the ultimate fragility test for Bitcoin. People don't get it. The miners don't need to make money. They can get kicked out of the game if they're not profitable and they turn off their machines. Well, guess what? Someone else will pick up the slack, and I'm pretty sure that's why they built in a difficulty algorithm that changes depending on how many people are mining to keep it running. Now, again, we're in volatile times. That means Bitcoin could become less secure and more prone to a 51% attack. But at that price and those mining difficulties, maybe it's not worth it again. Again, this is the perfect test. Bitcoin needs to be able to go through this shit anyways. And not just the speculation, but it needs to be able to go through the crash. And it needs to be able to go through miners not being profitable. If you can't do that, it's not as good as we thought it was, right? So this is important to keep in mind while going through here. Are there some people on YouTube here to demonstrate the SBA loan walkthrough? Yeah, I'm not going to be able to help with those ones. Ross basically said if 3,200 breaks and the low wouldn't be too far from there, 2,800 to 1,200 it's reality unless the highly likely scenario of Bitcoin rising above 14K. Yeah, I agree with this. It's not very likely. Great feedback. Again, for any of you guys that want, I will post that Ross write up on our Twitter. So go the Arcane Bear Twitter there. It's fantastic. Very great write up. Obviously aligns with our sentiments, so I wanted to share it. He wrote that on the 11th, which is yesterday. S&P futures, ticker SP1. Thank you. Opens at 6 p.m. I appreciate that. What do you trade, sell into USDT, Gemini, dollar? I actually don't sell right now. I just go short. But that's because we can. That's the best type of option I can get with Bitcoin here. If you need cash or fiat, or you're going into a spot where you want to be able to buy back lower, yes, you can use USDT or USDC, but I don't, so I wouldn't be able to help you on that sentiment. And again, this is what's so good about the trading aspect is being able to come up with your sentiment and just hit execute is kind of up to you. What we do with the Arcane Bear private trading den is give people the tools that they need to be able to make those educated decisions and help give feedback. Like in the group, we have everyone that's very helpful, learning together. We're all posting our charts and bantering back and forth about life and trading, because it's, you kind of build it into one. And again, removing your emotion here is going to be one of the most powerful. Love is key. If you want, go to there you go, found it, perfect. I remember reading somewhere that the effects of printing money don't take hold till at least 6 months later. Very possible. And until they hit the streets, I would be imagining. I don't think that there's like a time frame on it. You'd want to be looking at probably when the money hits the streets, like the currency circulation supply, I think is what they call it. Outside the box edge cases, which crypto brokers do you recommend in each region? I don't know. That would really depend on how much you're trying to buy, where you are. I don't know how to answer that easily because there's a lot of regions, so I won't be able to do that. Your thoughts on BTC halving with hash rates low? Again, Bitcoin's designed to be able to make it through these difficult times. So I don't think it really matters. I think that the Bitcoin going down in price during the halving is still very possible, even though miners might get paid half as much. Again, this could push us much lower, and these would be all these aligning news stories. Oh, Bitcoin price dropped because miners dropped out, and that's what the other traders will say, but that's not really how it works usually. The only thing that can change things to such a large degree is like a motherfucking pandemic. Like when I think we put out the newsletter in March being like, hey guys, you probably want to get ready for this shit because it's going to get fucking crazy. So do you use the ribbon hash metric? I don't know what that is. Hex is, no, I'm not even going to say it because it's not. Maybe it's, what do you mean? Is it word nothing now? Is it stable at nothing? Is Hex stable at nothing? Is that what makes it a stable coin? Not that any of them, look, any stable coin could be I don't know if they're backed by anything. Like, why are they just printing money out of nowhere too? It kind of sometimes seems like it, doesn't it? I'm not really sure. Economic impact on payments info. Nice. Outside box. Thank you for sharing that stuff for the guys of you that were asking about the stimulus package. All the uncertainty in the markets, plastic symptoms saying, makes me feel like any decision is irrational. Now I'm just sticking to dollar Xing every week. Yeah, that's good too. We went short because it was not irrational to see the depth of that the pandemic would take, and probably this is going a lot lower. So irrational just means you're emotional. You can we've made very clearly logical decisions here that are very rational. So I think what you're saying is when the decisions are emotional because people are in a fucking pandemic, because there are a lot of very easy signs that you can see to make logical decisions now that don't just include dollar cost averaging in. That's my personal sentiment. And I'm glad to see you here again as well. I hope that helps though. I just think there's logically speaking versus the emotional, that's where we get irrational, is when we're emotional. So as long as you're not emotional, you can make logical trades. Can you play a nice improvisation at the end? I will do that, Screwface. I will grab the guitar. I'll grab the oud. I'll grab one of the ouds actually. So let's go through the last questions. Plastic Symptom says, with all the cash floating around, it makes me feel like a surprise bull run isn't impossible outside of the realm of investors that have been laid off. yeah, most hedge funds are going into like protection mode. There's only one hedge fund that did really well, and that's Nassim Taleb's. And well, one of the only ones. He did 4,000% already. I've recommended his books nonstop. If you guys haven't read them, read any one of Nassim Taleb's books. He's a fucking genius. I love his work. That's what I suggest. Leah Bear, great to see you in here as well. Leah says, what are your views on low socioeconomic populations that rely on tourism like Bali, Mexico, Costa Rica with no government support? Hard to see the case for BTC right now. Yeah, I agree. I don't see it coming back. I think this is going to be a few years of downtime for Bitcoin. This is going to be much like the time when we went from 2012, 13 after that rally spike into 1,000 in between 2013 and 2016, 17. I think it's going to be a few years of downtime once we hit the bottom here, and it's really going to test everyone's will about Bitcoin. So being able to actually acquire it once it's gone that low is going to take a very solid mindset. Now, to go back to the first part of your question is what are my views on this one? I think places like Costa Rica and Bali are going to really have to focus on their internal infrastructure and production. I think tourism is probably dead for the next 2 to 3 years. You're still going to have brave travelers. Like, I'll still go traveling, but I'll just be very hesitant on which countries I go to, right? I know I can get from Costa Rica to Guatemala and stay hands clean, not getting sick, put my N99 mask on, and travel, because the numbers in certain countries like Costa Rica, we only have 500 cases here, versus tens and hundreds of thousands in other places. So we've done a really good job locking down, but the beaches aren't even necessarily open here right now. So we're in a bit of a predicament because the government knows it can't let it go too far before we have a breakout here that would overwhelm the hospital system. So places like Costa Rica and Mexico, if you look at Ecuador right now, I think it's a prime example of what happens if you don't lock down. Horrible bodies in the streets, hospitals overwhelmed, people can't find their loved ones. It's not fun. That's what happens if you just let it go. Again, there's some arguments in other conversations. I don't want to dip off into that too much, but I think we're probably a little bit way behind. Costa Rica, I know, is giving a few $100s to each citizen as their stimulus package if they lost their jobs or were laid off or the tourism industry is dead. But I think Costa Rica will likely open up a new type of tourism, which will be much more, will you invest in our country type of tourism. Hey, we'll give you like a year-long visa. Leo, we're so used to them trying to kick us out of the fucking country every 30 to 90 days. They'll probably give us, we'll give you a 365-day visa if you can promise you'll spend X amount of dollars in our country over the year, because people are just not going to go back to the normal travel that we had. You're real, you can play from the heart like a real guitarist. Thank you, I appreciate that. It's very kind. Although I will play the oud tonight, not the guitar. I could play the guitar too. One of them. We'll decide. As soon as I walk over there, I'll just ask the last of these questions. Outside the boxes, when you trade, which platform and brokerage do you use? Mostly Binance. I've traded on BitMEX and Bitfinex. Spreads are good there too. The liquidity on Binance, because their Binance US dollar token is really why I like Binance. Not that I like Binance necessarily. It's just for shorting and maintaining value. The BUSD is they've got a lot of it, so there's no gap in the trading time there, which is nice. Love is the key. Says, I looked on many of your videos on YouTube, but I still don't understand the bear claw and the other indicators that you have on TradingView. Can you explain those indicators from your TradingView account? Okay, let's do that. Let's go to the daily. We'll turn the bear claw on and the cloud off. Okay, there's the bear claw. Okay, zoom it out here, and then we'll hide the drawing marks. Okay, so currently the bear claw and the 21 moving average is what you see. So the bear claw here is a stacked set of moving averages, and then your 21 simple moving averages I've added separately, but you have your 200 and 314 simple moving average on the daily. So you've got like 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, or 60, 70, 80, 90 EMAs. So we can actually look that up by going to the volume bear claw settings, and we can look at the script here. So if you look down in the script, you can see that it's a stacked EMA of 5, 8, 13, 21, 25, 34, 35, 40. So the first bunch of these numbers all follow the Fibonacci sequence. I've edited it myself. This is, again, it's a custom one, so we've made it for our own, and then it goes up from there from 35 to 40, 45, 50, 55, 60, and so on, upwards to 90 and 100. So this is the bear claw just uses EMA. So what you can do is you can see the price suppression based off the exponential moving averages, and then again the long-term moving averages here as well on the outside of the claw. So how do you use them? You know, this is not as easily answerable question as you might think. You want to use them as visual indicators for price momentum against volume profiles, against other indicators, right? So often what I'll do is I'll just zoom in and out of the chart, paying attention to different areas. Okay, so let's use this daily right now. So on the daily right now, we're right on the top of the 20 moving average, which is again the bottom of the bear claw as it breaks. So this is our key area of support. If we break below this, we're going to come down to 6,200 and then 5,300 probably pretty quickly. Okay. So what you end up doing is over the years or months or days or weeks, however long you've been playing with these, you can see what they do by watching them. So if we go to the 1 minute, as explaining it is difficult. It's like trying to explain to you what an E note is. You're like, okay, well, it's this frequency and it's, you know, but what good does that do you? It's much more about understanding the emotions. Okay, so here we see we've broken down at below the claw. We've turned orange now, which is red. So for those of you that haven't been able to tell yet, my color sequencing is yellow and purple. Purple is a bullish, and red or orange or yellow are my bearish indicators. My sell, my long and my short, or my buy and my sell, or my green and the red, essentially. These are just colors I personally like, so it makes it more entertaining for myself. We can even see it like a little. So the bear claw itself is just stacked EMAs with the outer bear claw at 200 and 314 on the simple moving average. Again, so I'm trying to tell you what that does, and what it does is show you the price suppression of the area that you're going into, or the suppression or resistance, I guess, depending on how you want to, which way you're going. So right now what I want to do is open the Ichimoku cloud because it looks like a trade might be developing here. So I'll turn the bear claw off because on these smaller time frames I'm much more interested in the cloud than I am on the moving averages. The moving averages are better in longer time frames. The clouds I like on the shorter time frames. So right now we're in the red and like the sell area of the cloud. If we puncture through this after having gone up and above it, after being had sell pressure up here, and we stay below it, especially below this red and this blue line, which is both your buy and your sell volume through the cloud. Blue line is buy and red line is sell. Then we're probably going to start to see this drop here in the next maybe 45 minutes or so. So again, these indicators, more so than knowing what they do, is watching them and seeing how the markets react. And from there, you kind of make your own story of like, well, what does an E note feel like to me? I can't really tell you what the E note is. You kind of got to experience it. So a lot of these indicators, bear claw included, is much more experiential. You know, some of them are a little bit easier to tell, but usually if you watch them for even a few days, you're like, oh, okay, I see how this works. Especially lined up with pattern recognition, different patterns that are out there in the markets too. So good question. Hopefully that helped answer it. And then we'll leave it. Last few questions. Eagle's Nest, bear claw. Eagle's Nest I'm not going to use. I haven't been using for a while. Took 3 weeks to reverse the Trump bubble. Now we have Obama stock market bubble to get through. BC is heavily corrected to U.S. markets on macro scale. Correlated. Yeah, I believe it's correlated as well. I believe a lot of the growth we saw in Bitcoin was due to the fact that the markets were still going up and they were just printing money, contrary to the popular belief that Bitcoin would do better under inflationary purposes, which I believe it will, but probably after the pandemic. XRP says only 333 deaths in Ecuador to date. None of that makes... No, they're not calculating it properly. They just don't have the test to say confirmed, right? Those are totally irrational numbers. If you look at look, I've got friends that live in all these countries too. What do you think of Robinhood for trading? I've heard bad things about Robinhood. I wouldn't suggest it. Looks like LSU colors. Yeah, it's because I like the Lakers. I'm not a big fan of sports, but I always liked watching the Lakers play. I just like the colors. I always liked the royal colors. Didn't have much to do with the Lakers. I just supported that team because I like the fucking colors. If it was like the New York team that had the yellow and purple, I would have liked them. It didn't really matter who it was from. Martin Daly says the Fed is buying up the world with money, more money printing, stronger it becomes markets of one purpose to fair price discovery, which has been allowed to do. This will end in disaster. Yeah, eventually, but disaster could be a long ways away, especially because we're in a current disaster already. Thank you for the great explanation. Okay, I'm going to leave it at that, guys. Thank you all for joining us this evening. Remember to give us those thumbs up if you like this content. I am going to play the guitar or the oud. You type guitar or oud, and the one that gets the most answers there on that one, that's the one I'll play. I'll give you my silly face here, and we'll go from there. I think I'm going to... I'll figure it out. I'll grab one. Oh, you said guitar, but it's too late. I already grabbed the oud. All guitar, not the oud. Okay, sure. Like the oud is like. Okay, that was all guitar. I have to put this back, I guess. The people have spoken. Okay. Okay, well, we got the guitar. We'll play the oud next time. We don't normally go live and too often, so we'll kind of make this a little bit of a jam sesh or something here. Okay, how does this work here? Oud. Now everyone's saying oud. I switched. I grabbed the guitar. You said guitar. Then you want oud. Come on, Bear Family. We're gonna do the guitar. Actually, the oud sounds better. I mean, it really does. It's just a sexier instrument, I think. We'll go with the oud. This is a song I've been working on recently. Tell me what you think. Okay. Thank you, Bear Family. It was had a great time with you guys this evening. Thank you very much. Make sure you have a balanced portfolio, enjoy your life, and prepare for all the good and bad that comes in life. You know, I think one of the best sentiments I've heard is we prepare for the worst and we play with the best. Something like that. I don't know. I got the quote wrong. I'm sure it's prepare for the worst and hope for the best. But I didn't want to say the word. Hope is no, you don't trade on hope. You trade on logic. Anyways, thank you guys all for joining this evening. We'll see you guys again on the other side. I really appreciate all the support from the Bear Family, private and all the YouTube bear family as well. I will be doing my videos out in the jungle again starting tomorrow, and I will keep the niche focused to business, finance, philosophy, and the podcast section without dripping off too much into random things like what I think about conspiracies, because that's a little bit of a different field to get into, and I'm not well enough educated in that spot. I got a lot more experience in business and finance and philosophy than I do in epidemiology. So thank you guys all for the support. I really appreciate it. It's been such a fun ride the last 3 years together. Happy anniversary, basically. I think this is almost a 3-year anniversary is right here between March and April. So thank you guys for all of you that have been here since the beginning, and for everyone that's just joined. If you haven't yet, hit that subscribe button. You never know what the hell you'll find in the bear cave. This is Tio. I'm signing off for the rest of the evening, and we'll see you guys on the other side.